What's going on, everybody? So let me do a quick recap video on sprt. The last video I did on sprt support.com got a lot of negative comments in the comment section. I called this stock, I said what I said was to be careful with this stock because it looked like it was a pump. Okay. And a lot of you guys got mad about that. Now, there is a lot of DD on the stock. Okay. What the company is doing with the way that they run their business for the future, so forth and so forth, can be good. So in no way am I saying that this is just, some pink sheet over the counter stock that's just a random pump and dump. But when I say that this is a pump and be careful for the dump, holds true. So what I mean by that is since this ticker, okay, going back months and months and months, I have the daily chart pulled up here. So going back months and months and months, if we just go back, some time here, $1.62, this stock, it really wasn't doing anything. In March, it gets this bit of a pump up to $9 and then quickly sells off. And then it was in a range here, bottom range being $3, top of the range being $5. Again, really didn't do anything. Started to build some steam here going into July. Highs of 9, 11, and then, realistically the last week started ramping up as more retail traders started to get involved in the stock. $11, $12, $14, $15, had this big run up here to 20. I had made a video here and said, right around 19 to, start to be careful with the stock. Just due to that, if it wanted to backtest, we could backtest in here into the $16 range. Rising support was going to be about $17. And then we had this huge gap up. Okay. It was really after hours. If I do go to the hourly time frame here, kind of zoom out so everybody can see, Thursday, let me find after hours. So realistically right here on Thursday, after hours started to get this run up. So closed at about, $20, $22, so forth. And then had this run up after hours here to this $29 and $32 area here. Friday opens up, pre-market just started to run. So I had made that video saying that, what we want to see, can this stock run to, 35, 40? Yes, it could, but you need to be careful. Lo and behold, the stock just absolutely exploded, went all the way to highs of 59.69. So if you were in this trade, let's say going back to Wednesday, okay, Wednesday we were trading in the $13 to $14 range. If you were in this trade and you were able to ride this into the 20s, into the 30s, after hours, 35, let's say, for example, you did not sell, you did not take any profits. And on Friday, you were a part of, this big run up here that we had on Friday. So, realistically had that after hours pump up to, on Friday, we had that pump up to 55, and then quickly, we kind of sold off here, back tested the 5-day moving average, rising support. Wicks came all the way down to the 10, which is good. You like to see a double bottom here. Bulls stepped in, retail traders stepped in, bought this back up. And about 9 a.m. Pacific Standard Time, we ran this stock all the way up to $60. So be very, very careful. I know a lot of you want to hold this stock and trade it for the long term, but this is a fantastic move. We're talking about in a week's time from $14 all the way up to $60. So a lot of you guys could have made a lot of money depending on if you're playing options contracts or you're playing equity side, so forth and so forth. And I said that I said around this $30 to $35 range, be careful. If you do get in this over the highs of the 30, after hours was 35. If you were in that, after that 35, to be careful, to kind of take some money on the way up. Stock was running in the pre-market and, right out of the gates, spiked up in the pre-market and then immediately sold off. So a lot of newer traders can get somewhat scared. When they're in the stock here in the $20 to $25, $30 range, or even below that, and you see it run up to the 50s and then immediately starts to sell off when the market is open. you can get scared and kind of sell out of that. However, if you were in prior to Thursday, you are sitting very, very nicely on the stock. So just fast forwarding into Friday's session here, after we had, 2 hours of downward pressure, the stock began to move up a little bit here. We did hit highs of 60, and then we had 1, 2, 3 hours of downward selling. So right now it does not look good where it is currently sitting below the 5-day moving average on the hourly chart. But if I just do go back to the daily, we see this huge pump. I mean, this is not okay. So for a lot of you guys that like to get upset, I know you guys, get very, very emotional when it comes to stocks that you believe in or companies that you believe in. This is not normal activity. Okay. This is a squeeze, to say the least. It's a lot of big money retailers as well as institutions and hedge funds who are a part of this squeeze. So it comes from a lot of downward selling pressure, a lot of short sellers, a lot of, institutional money that was possibly shorting this stock. But again, you're not going to see your big Goldman Sachs trading this stock. They're not going to be actively trading this stock. Now, whether they are a part of these run-ups, it's anybody's business. But this is not a stock that, let's say, go back here a month, 2 months, 3 months, 4 months ago, that they're actively trading in and out. When the stock is already so low like this, $4, $5, what is the benefit to short the stock here? So I understand, that the stock is heavily shorted. It comes from a lot of retail traders that are saying, it's too high. We're going to go ahead and short this stock. So it begins to build up a big, huge short interest, and you can get these big squeezes. However, this is a humongous squeeze on the stock. Can it go over 60? Of course. Look what GameStop did back, in the beginning of the year. GameStop was a $20, at the time, $20 stock when it started to really increase in price and went to like 70 and 100 and 200 and 300. 400 and 500. Can this stock do the same thing? It's possible. It doesn't have as much a short interest as a stock like GameStop did have. There was a little bit more to the whole GameStop short squeeze. They were really shorting that stock into bankruptcy just due to the fact that, the business model they believed was dying, brick and mortar retail stores with online, digital downloads for video games, so forth and so forth. And then obviously we had that whole pandemic shutdown that did not add to the short interest. But this is a different stock, a different company, a different reason for why it was shorted, and different players. Okay. This is not the same players who were shorting AMC, the same players who were shorting GameStop. These are different players, in the game here. So this candle on the daily is extremely bearish. Okay. It's extremely bearish. We have this long wicking tail here, and a big, red bar here. So that price, $26, $25. Currently the stock is $27.95. This here is extremely bearish. There's a huge gap to fill down here to this $20 area, which was originally the trend line. I said that if we were to get over this $20 area, had room to stretch. Obviously it didn't even give us a chance, as it just gapped up overnight and then completely ran to 59.69 here. So, if I kind of take this trend line off here, because this is completely irrelevant now, this is a pump. Okay. It's a squeeze, whatever you want to call it. The verbiage on what I use to identify this move, can be different. If you want to call this a short squeeze, a pump, followed by a dump, whatever, it is what it is. This move is unnatural, is what I'm saying. This is not a natural move that a stock makes, that a healthy stock makes here. Okay. This is a lot of retail traders who are in this. And the whole reason of my last video is that as a day trader, what the due diligence and what the fundamentals are on a company are irrelevant to me as a trader, because typically I am not in trades longer than an hour to 2 hours. So what the company does next quarter, next year, in 10 years is irrelevant to me. So if you are a investor or a long-term swing trader where, the earnings play a part, where the fundamentals play a part, where the company's growth plays a part in what you are trading. It's completely different style than the way I trade as a trader. So as a trader, and looking at it from a technical standpoint on a day-to-day, hour-to-hour, minute-by-minute basis, this is not a natural move here. So we do not want to be buying as a trader in this area unless you're experienced and you have a strategy with good risk management, stop losses, so forth and so forth. And you have a plan to take profits after you enter the trade. We cannot just enter the trade because the stock was currently trading at $20 and now it's gapped up to 26 and 30 and 35 and it's at 40 and it's just running and it's getting halted and so forth and so forth. And we say we want to get in. If you do get in, you of course you can make money as it's moving so fast on the way up. But what is your plan of attack as to taking profits? Let's say, for example, you've entered this trade anywhere over $38, okay? Over $38 to $59. What is your plan to take profits? Is that plan to hold, hope, wish that it comes back up to $59 and $60 and possibly past that and continue to squeeze more over time? Sure, if that is your plan, then that's okay. There's no reason for you to really follow the chart on a minute by minute basis unless it's just absolutely exploding. But for some of you guys who are looking for that short-term trade, that, maybe that day trade, that hourly trade, we do not want to be entering into the stock here if, potentially, it's selling off, so to say. So be careful. What I would look for on this trade is, what do we do down here at the $19 area, the $20 area? If we continue to come down here to this $20 area and we get a bounce, okay? So we need to come down, test these levels, these rising supports here in the Bollinger Band and a 5-day moving average, as well as a linear regression line down here between $16 and $20. If the stock gets down there, is an area of opportunity where you would like to bounce this stock, okay? If it continues to go down to 26, 25, 22, you do not want to be buying and potentially be catching a falling knife, trying to guess as to where this stock is going to bounce. Let's just let it get down all the way to the $20 area. For some of you guys who did buy up here, who were commenting on my videos saying that I do not know what I'm talking about or I am misinformed, tell that to somebody who believed in the stock at 52 and was looking for a day trade on the stock, held, did not sell at 60, and now the stock is trading at $27. You tell them that they are not misinformed and to continue to hold. I'm not a financial advisor and I do not tell anybody what to do with their money. However, something like this, I am not going to be buying on the way down. Just because it ran to $60 does not mean that it has to get there. Now, could it come back? Of course it can come back. In no way, shape, or form do I say or do I believe that the stock doesn't have to come back to 60. Not to say that maybe in a week or 2 weeks or a month or a year from now that this stock cannot be trading at $100 to $150. I'm not to say that. What I do know is technical analysis, and what I do know is that there is a major gap to fill here at this $20 area. So until it comes down to this $20 area, I'd like to hang tight and stay out of this trade until it comes down here, kind of test this rising support and see, does it continue to break down past support, or does it break down past support and then quickly reclaim that? And if it can quickly reclaim that within a day's time or a week's time or 2 weeks time, depending on how much sideways action we want to do, does it start to curl back around and go up? That would be the area of opportunity to potentially get into this trade for a swing. So I am not misinformed as to what the fundamentals are on this stock, okay? I have done my due diligence. Of course, with a heavy short interest, any stock has the potential to put in one of these explosive moves. The whole point of the video and my technical analysis is just to be informed as to where potentially your stop loss would be and where potentially you are looking to take profits at, okay? In no shape or form do I like to see retail traders just enter into a trade because everyone is talking about it and it is exploding with a hope and a dream that the company can do X, Y, and Z. If you entered into this trade at 43, where is your stop loss and where is your profit target at? If you entered into the stock at 49, 50, where is your stop loss and where is your potential target profit taking at. If you have those plans set up in place, then you are fully equipped with the right arsenal to enter into one of these trades. However, if you are somebody who is just listening to everybody else on social media and saying that this stock is going to continue to run and it's going to continue to squeeze, then what are you basing that off of? Okay. If you just enter in here, let's say between 45 and 60, okay, what is your research telling you as to how high this stock is going? If you do not know how high the stock is going, then how can you say that you just continue to hold? Because if you continue to hold and this stock comes all the way back down, let's say to 20 to 14, and it never comes back, then how long will you be stuck with your capital tied holding the bag? So just be very, very careful is the only point that I was trying to make on the last video. By no shape or form was I trying to advise people to stay away from trading this stock, holding this stock, investing in the stock or the company. That is not my intentions. Again, I am not a financial advisor. I do not, recommend, what people should trade or should not trade. What I'm just saying is we want to take the best possible trades. And right now that on Friday with such the huge run up, if I just go back to the hourly chart here, with such the huge run up, let's say, for example, you were not in the trade on Thursday, which Thursday is right here. This is Thursday. If you were not in the trade Thursday and Friday, you started to see this explode in the pre-market. Okay. Here's the bell open here. If you did not bounce this stock into rising support here or even here, what is your plan of attack? If you did bounce this stock off of the 10-day moving average here, fantastic trade. This would mean that you got into the stock somewhere around $33 to $35. Potentially you could have sold at 41. You could have sold at 46. You could have sold at 60. On the move down, you could have sold at 50. You could have sold at 48. You could have sold at 47, 46, so forth and so forth. So plenty of opportunity to make money on this trade. You just need to have a clear action plan as to where you are going to take profits and not just tell yourself that, well, I'm going to continue to hold this stock because everybody's telling me it's going to 100. Now, could it go to 100? I don't know. You don't know. Nobody else knows. All we know is what the chart and the price action is telling us. Right now, the price action is telling us that, we're trying to find support here. You see, we made a bottom here at around 26. We kind of bounced off of that, got stuffed at the Bollinger Band as well as a 20-day moving average and currently trading below. So this stock can do one of two things. It can reclaim the 20-day moving average and give you a trade from 31.50 to 33 and after 33 to 35. Any close over 37 has potential to retest this $51 and $60 area. Now, if we do lose these two bottom channels here, and that price is going to be about $25.40, your next area of support is going to be 24.73, and then below that around 21.64. I believe that if the stock comes down here into this $20 to $22 area, is going to act as a pretty strong level of support. I would say anywhere between $20 to $24 is going to be an okay spot to potentially pick this up on a swing. You are going to have to ride out a little bit of the bumps and bruises until it starts to build a momentum up again. However, if we start to lose this $20 area, 18, 17, 15, it could chop around in that area. So let's just see what we do when we come down here to the 50 EMA, which is about $24. If we can continue to hold this area of $24, we want to see taking out price action of at least $31.72, $32. If we can take out $32, potentially this is going to give us another trade here. I hope that helps, guys. And I will catch you guys all on the next video.